Good morning, traders. It's 8:03 a.m. Chicago time on Wednesday, the 12th of May, 2021. This is episode number 1992. I bet you're curious about the year 1992, in which the Dow Jones Industrial Average was at 3301 on the Dow Jones Industrial Average. It's currently at 34,000. Average income in the U.S. was 30 grand. The average cost of a house was $122,000, and the average monthly rent was $519, and the cost per gallon of gasoline here in the U.S. was $1. That's 1992 for you. I'm sure a lot of fun things happened that year, but those are the key elements. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Bouncing right into the pre-market summary sheet from Convergent Trading, we see that yet again, we have a market that is in a risk-off stance. The CPI data was came out a lot stronger than expected, and so the market spiked down. We had a very large spike. The number came out at when the S&P was at 4131. That is the scene of the crime of the SOC. The market was balanced at that point, and it spiked down to 4095, almost 40 points. That's how significant that miss was. CPI year on year came in at 4.2%. 4.2%, estimated at 3.6. The prior is 2.6. It's a big jump in consumer prices. No surprise, since, as I said before, 25% of the dollars in circulation were put out into the money supply in the last year. That money's got to go somewhere, and where it goes is it inflates markets, stock markets, and so on, and it inflates prices. And that's what we're seeing. Finally, we see that the economy actually works the way it's supposed to. So that's that. The laggard today is the Nasdaq, down 160 points, 161 points, or 1.2% currently. The Russell is down 19.5 points, 0.89%. The S&P is off 21.5 points. Still trading inside of yesterday's range, 21.5 points, 0.52%. The bonds are off 11. The 10-year notes are off 8.5 big ticks. The Dow Jones is off 68 points. The leader today is crude oil. Crude at 88 cents, up 88 cents, trading at 66.16. Crude continues to break higher, up 1.35%. I'm sure all of you have heard about the cyber attack on the major pipeline from Texas into the Northeast corridor, supplying refined product, gasoline, and so on. The price of gasoline had not been impacted up to this point because of extensive storage in the Northeast of the United States, and that's starting to run low. And the expectation is the price of RBOB and the price of gasoline at the pump is likely to rise. So the top U.S. fuel pipeline edges toward reopening as gasoline shortages worsen. If you haven't heard, there was a cyber attack 6 days ago, which installed ransomware and locked the computer system, the control system, to this pipeline. I guess somebody opened an email that they shouldn't have or something. So that's where that stands. The European markets are up, bucking the trend in the U.S. markets. The Euro stocks and the DAX are both up 0.38%, 0.54% currently. I'm looking for a bounce. We already had a bounce somewhat in the S&Ps. Looking for that to continue It has printed below yesterday's low, which was 4103.75 against the 4104 single print. We'll go over that in a minute. And currently the S&P has traded 450,000 contracts. And as you can see on the top in the middle there, the overnight statistics, the 1 sigma level for volume is 314, up to 314,000 contracts in the last year. We've had some really high volume days last year in the overnight session. Is considered normal. We are well above that 450,000. We're into the second standard deviation in terms of volume. The range is 55 points, and we are well above 1 sigma, which is 43 points, as shown on the overnight stats in front of you. The profile has multi-distributions, but generally is balancing around 41.32. We are below that, but it is a multi-distribution profile with a point of control at 41.32, which is right where the mid and the full session VWAP are, and that's why we describe it as balanced. The high volume node is where the mid and VWAP are resting currently. So that's where that is. For the rest of the day, we've got crude oil stocks at 10:30 Eastern. Then we have a 10-year note auction, Fed's Bostic at 1 and Fed's Harker at 1, all those three at 1, and a monthly budget statement at 2. Let's look at what was expected yesterday versus what we got. Here we go. So this was the primary scenario of yesterday was a push into the low volume node area. And if you recall, I showed you the heat map, and there was a lot of size at the 4140 with the low volume node resting there, the overnight LVN resting there, and it is also the low of a couple of days ago in the 4140 area. The expectation is a push higher responsive buying into 4140 or thereabouts. We did have the point of control just above at 4151 with a lot going on at 4150-51. That's the next big area. So it could travel as far as that, but I was looking for responsive selling, and I'm looking to sell against this 40 for a run at the 41.23, and then ultimately I was looking for 41.04. That's what I circled right here, 41.04, which is a single print, and that's where I was expecting the market to base before coming back up. That is pretty much what happened. Let's take a look in our review segment. Let's kill this. Let's kill that. So here's what happened yesterday. A lot of rotations. Look at that screen. Remember, I'm always looking at the screen at 3 pixels per bar to gauge the action, and you can see that it's filling the screen here. There are a lot of rotations. There are 2 screens worth of rotations, if you will, based on yesterday's action. Lots and lots and lots of movement. As I said, lots of opportunity, and yesterday was a day where you did not want to get distracted on the open and to pay attention to the auction and the narrative as it unfolds. And we did get a lot of action. So we swung down to 28.50, found buyers, pushed up to 38.25, found sellers. That sets up our opening swing high and opening swing low. And now we're gauging to see, does it keep crossing these 2 lines? If it does, then it's likely to be a balanced day rather than a trend day, and we are likely to do better trading from the outside in. We immediately respond across the opening swing, and we push through the 40 right here, pull back to the open, and then catapult to 56. And I lost money in this. I was short into this into this second attempt to push. I read this right here as failure to push against the 4140, which was the pre-identified area that I wanted to get short per scenario 1, and ended up having to get stopped out somewhere up here, pushed to 56, and then turned over and came right back, gave an opportunity again at the 40. On the other side, we have somewhat of a head and shoulders set up at this point, and from there aiming for 4104, and it hit 4103.75. That was the single print that was down here. Now I've taken that away, but there was a single print at 4104, and it's the low volume node, the composite low volume node area. Down here, you can see the blue profile, how it goes flat. This area is poorly traded. So once it hits there, we see the largest up rotation, the largest positive rotation on the day. And so now, as I warned in the head trader channel on Convergent Trading, I said this is the largest rotation of the day. I am moving into a neutral posture. I'm not looking to the short side anymore. It hit a major area down at 4104 and followed up with a large rotation up. To me, that means I lay off of the short side. It pushed back up to the low of the morning right down here, pulled back, higher low, and off to the races we went. I did expect it to take out the 56 quarter at around 1 o'clock Central, 2 Eastern, well before the open, and it kept trying and trying and trying, and it just could not do it. And we ended up with a normal variation day down with balance in the upper distribution. So with the point of control of 41.45. From here, what I saw is a very likely base to continue. We have we left a gap zone. Remember yesterday I said historical probability of filling the gap up to 41.7850, filling the gap zone, the external gap, was somewhere around 5.25%, and that played out. 5.25%, very, very low probability that we would continue to 41.7850. So we left the gap zone, but we also left this really important area. This is the 50% fib from the high to the 41.0375 at 41.68. It is the gap mid at 41.67 and a quarter. It is a low volume node. That area is now important. The 41.68 may be something you'd want to note down for when we get back up there. Okay, so that's the rundown of yesterday. Yesterday had exceptional volume, over 2 million contracts, 2.01 million contracts, about double what is considered common, for the S&P RTH session. This is what we have done since. I did expect this to actually continue higher in the overnight session. It attempted to push higher, but ended up holding steady in the Asian session, pulling back and holding steady in this 41.30 area. Europe opened right in here, also tried to push higher and then consolidated on top of the 41.30. So essentially, the overnight session consisted of the market just hanging out at 41.30. We just shifted the overnight point of control down to 41.18 and a quarter. But overall, 41.30 has been the balance point for the overnight session. And then what you see here is the spike down as a result of the CPI data coming in very, very strong. Now, CPI coming in strong, what does that mean? Does anybody know what that could mean, why the market's selling off? If CPI being as strong as it is, means that we're going to have to pull back on the Fed crack, the Fed heroin of injecting injecting money into the system. Their mandate is to keep inflation at about 2%, at 4.1 or 4.2%, whatever it was. It's really high. They're going to likely need to change their tune, and they're going to likely need to start draining money out of the system. So draining money out of the system means higher interest rates, harder to get loans, harder to get money, which means that this will likely impact the earnings for companies. This will likely add increased cost because every company basically has to borrow money for its operations, and now the cost of borrowing money is likely to go up. So we need to pay attention to the treasuries. We need to keep an eye on the treasuries. And if you look at what happened with the treasuries this morning, let me show you. We're going to go back to talking about interest rates and yield and all that good fun stuff. Here's my overview right down here. This is your 10-year note, and these are your bonds. And you can see, let me expand it a little bit, and you can see how they responded to the CPI data. The CPI data came in very strong. You sell the treasuries. When you sell the treasuries in the futures, what does that mean? Higher yields. Higher yields means increasing interest rates. This is completely what is expected. And so now the treasuries are trending down. And so the yield is rising, which is exactly what's expected. So the market will do the job for the Fed. And so the Fed's going to keep talking about supporting the economy and so on. As long as the market keeps selling those treasuries and increasing yields naturally, organically, then the Fed doesn't have to do much. If it stops doing that, then the Fed will have to react. So be very, very important. This brings the Fed speakers back to center stage, and very important to listen to anything and everything that impacts yield going forward. The party may not be over, but it's likely to begin to be over, right? Somebody's starting to turn on, increase the dimmer in this dark party room right now. So that's what it looks like, and people are squinting. So this is where we stand. Again, 477,000 traded so far. What have we done overall? I know this is going long. What have we done overall? Look at that. We moved from almost the high of last week. We missed it by 1.25 points, by 5 ticks, and we pushed back. We skipped through the 4181, right? The 4181 bounce, and we opened way down here yesterday. And so we have a distribution from Monday up top, a distribution from yesterday down below, with a gap zone, a big gap zone above us. That is right on top of the MC point of control. This is a huge magnet up here now. Huge magnet. Any push up, if you see an impulse higher, and it looks like it's likely to push yesterday's high, which was 41.58.5, was it? 41.56.25, then your target is likely to be 41.80, giving you about 14 points of range, with about 3 to 4 points of risk. Pretty good R factor, pretty good trade back into balance right in there. Looks like I'm flipping somebody off or something. Looks like I'm drawing obscenities on this chart. So this is where we are. Look at where we are opening today. We're opening in the wick of yesterday, in the lower range of yesterday. So there's a fair amount of overhead resistance coming into today's session. So just remember that. The point of control yesterday is quite important. At about 41.49, something like that. That's going to play a role, and it's going to be important to see how it responds to yesterday's open. But it looks like it's setting up to explore lower. And remember, 40.67.75. 40.67.75 is the next big area below 4,100, and we breached 4,100 overnight. So The important thing today is to see, hey, do we push the 4,100? Do we push through the 4,100? We're currently trading at 4,115. Do we push the 4,100? If we do, I am really looking for a flush into 4067. I've been talking about this for a couple of days now. Let's take a look. There's not very much I can show you in the order book on Edge Pro X here. You can see there's some size of 4120, a large block resting there, a single order that's making up about 500 of the 600 contracts there, resting there. Again, this is MBO data on Rhythmic. The book is quite thin with 70 lots, 80 lots, and so on. It's pretty thin. It looks almost like the NASDAQ, with the way the NASDAQ normally does. Let's increase the filter here to just see the big areas. We're still getting pretty good sweeps to the upside. The 500 lot right there, 500 lot in the tape. You can see the 500 lot in the tape right here, 500 lot in the tape down here. We're seeing a lot of sweeps. Yesterday we saw quite a few sweeps of 2,000 to 3,000 contracts lifting as the market was selling off. Very, very odd behavior. Down below, there's really not all that much. I mean, this thing adapts to the scale to what's in view, but overall, we're not seeing the same as what we're seeing up here, 600 lot resting with about 500 of it being a single block. All the big blocks down here are 170, 150. There's not too much resting down below here. Going down to 4067, let's go all the way down here. Not much here. It just looks like the offer is relatively firm. The bid is pretty loose. That's what that looks like. Let's move on and look at what's expected for today. I am so over my time. I apologize. But this is what I'm expecting for today. Okay, let's make this really, really quick. A lot of talking today, huh? The way this is looking, the overnight inventory, if you recall, where is it? Oop. The overnight inventory is short about 80%, 80 to 85%. The expectation this morning, open, push down, push into 41.11 or so, and then I'm expecting it to respond. I'm looking for it to pull back to the overnight, the new overnight point of control for 41.18, and then respond higher to 41.30. I'm expecting it to rest here for much of the day before it starts to swing into 41.40 or higher. So 41.40 right up here, 41.40. And if not, then it's likely to push its way into 50 and so on and so forth. I'm looking for responsive buying today, given the way it whipped down and came back up in the overnight session. And looking at the tape from this morning, it seems like it's likely to get support. Otherwise, we're likely to get responsive back to 41.18.20, attempt to push higher, impulse down, consolidate at the open, and then squeeze lower to test our overnight stat 40.95, and that is likely to squeeze people out. I'm looking for it to run to the all-time high from April at 40.76 down here, 40.76, and then 40.67 becomes the next big area down. So these are the two key scenarios for the day. We are opening in range out of value. I am looking, because it's opening in range, I am looking for it to be responsive. But you know what? Let the market tell us what it wants. But our plan is, if it does push higher, then we're looking for 41.30, 41.40, 41.51 before we start attacking the gap zone, which is likely to push to 41.68, and that's a lot of range. Otherwise, It is likely to push into 41.25, potentially get to 41.30, fail, turn over, and squeeze down into 41.04, yesterday's low, and then take out the low and then start traveling to 76 and 67. Got it? Got it? Good. Good luck.